We may not see the full economic recovery until 2022. All right, so this is concerning to me. It's the deceleration off the Q3 insanity of the growth off the Q2 insanity of the decline. Q4 comes in at 4.0 GDP rate, which is lower than expectations. Lots of stuff is lower than expectations, and so people are starting to come out of the woodwork now saying, yeah, maybe it's not going to be as good in 2021. Some economists are saying 2021 is going to be a boom year. Man, I don't know. Hey, let's read this. This is from Yahoo Finance. Let's see. GDP, fourth quarter GDP expands at 4% annualized rate. The U.S. economy expanded in the final 3 months of Q4, albeit with slowing growth as a pandemic tore across the country at an alarming clip. Did it really, though? Did it really? Because we can't trust those PCR tests, and that's what everyone looks at. The Commerce Department's first estimate of fourth quarter GDP was released Thursday. Here are the main factors. GDP is 4% versus 4.2 expected, so lower than consensus. Personal consumption is 2.5 versus 3.1 expected. Core personal consumption was exceeded expectations, 1.4 to 1.2. Economic activity was expected to slow significantly from the third quarter's 33.4% annualized increase. Yeah, anyone thinks it's going to keep that is nuts. In large part due to a natural moderation after the record surge. The soaring third quarter had followed a record drop of the second quarter of 31.4%, which reflected the impact of the lockdowns. Overall, GDP remained below pre-pandemic levels from the fourth quarter of 2019. So we had a contraction, a 3.5% of the overall in 2020. This marked the first contraction since 2009 and the biggest drop since 1946. The increase in fourth quarter GDP reflected both the economic activity from the sharp declines earlier in the year and the ongoing impact of the COVID-19 pandemic, which included new restrictions and closures. Yeah, freaking idiots. The biggest contributor to U.S. growth, the consumer, weakened notably in December. Retail sales dropped on a month-over-month basis in each of October, November, and December, so a deceleration, big time. Though they remain higher year over year. Plus, non-farm payroll growth turned negative for the first time since April and December, suggesting a weakening job market may have chipped away at consumer spending power. The latest laborers report, weekly jobless claims came in at 847,000, still a very high elevation, and they're trying to make it seem like, well, it's lower than expected. Well, yeah, it's lower than expected because the last 2 weeks are higher than expected. All told, personal consumption in the fourth quarter increased at only 2.5%, missing expectations and decelerating sharply from 41% from the September rate. Other less heavily weighted components of GDP were mixed given a sort of batch of economic data. Let's see here. The housing market has been a notable standout, and residential fixed investment contributed 1.29% to the economy. Both housing starts and existing home sales surged to their highest level since 2006, driven by demand for new homes while social distancing and extremely low mortgage rates. Non-residential investment also contributed positively to GDP, led by a jump in spending on equipment. Meanwhile, trade dragged on GDP, with net exports subtracting 1.5% off the headline figure. Consistent with a stronger recovery seen in the manufacturing sector relative to the sector's goods exports far outpays those of other services. As always, the GDP reports only a backwards-looking snapshot and belied some of the weakening trends. Yeah, I'm telling you, man. Prospects for growth in the first quarter uncertain and dependent on a vaccine disbursement. Why? I don't get this whole infatuation. I don't get the whole infatuation of the vaccine stuff. It's crazy. The economy will bounce back strongly once activity can resume. Will it, though? I don't know that to be true. Hey, labor market weakness could last for several years. Yep, I completely agree with that. Payrolls dropped for the first time since April. Unemployment. All right, we already talked about that. Yeah, I don't know. I don't think that, we got weakening. It's deceleration. There's no other way around that. So I don't know how people can sit here. It's weird to me. I don't know how people can sit there and basically ignore what's inherently obvious to me, which is the economy is hurting, dudes. And if the economy is hurting, doesn't that have any effect on stocks? I just it seems odd to me that those two things are completely separate at the hip. I don't believe they are. And if the economy is hurting, um, wouldn't that forecast a declining at some degree, some stocks at some point? It just seems, especially, and we shall see. But it's just the numbers don't look like a booming economy going into 2021. They're decelerating across the board. High first-time claims on unemployment, decelerating sales, decelerating personal consumption, wage growth. This, I don't know. We shall see. But I'm pessimistic for 2021. I am, and you just might want to put on a green eye shade, visor like the accountants do, and say, let's just crunch these numbers because last year was a lot better than we anticipated. Can that continue on? We shall see. Hang in there.